Let's go live. Let's give a few seconds first. Okay. In 3, 2, 1, good morning, everybody. I'm Lee Seiler, also known as the Stock Doctor, and welcome to the Seiler Wealth Management video blog. And not much going on in the market these days. I guess, I don't know. Okay. You know I'm joking. And there is a lot going on. And when I came on last week, I think I came on last Monday, we had some bad days, and I said that you could have one more swoosh downward because usually there is a retest of the lows. We did that yesterday. We were down a historic 2,000 points. So far this morning, I wanted to do this video after the market opened because I want to show you we are up this morning. Now, I would have preferred seeing the market's down again this morning and rally back up because basically it could be setting us up for another disappointing day. But last week we had 2 really good up days and 3 down days. One was a bad one. But despite the 3 down days and 2 up days, the markets were up about 2% on the week. So that's a good thing. And there's a possibility, considering yesterday is Monday, that we could get back up to, depending on how the market performs. I mean, we were getting half of it back right now. We're up 800 or so. We could get back. But let's talk about truly the coronavirus. Let's talk about it. Flu-like symptoms. Yes, it is worse for the elderly and the unhealthy. Does that sound familiar? It sounds like the flu. Yes, it's a lot more contagious than influenza. But I heard an interesting statistic or fact yesterday, and the coronavirus, or COVID-19, we are waiting for COVID-20 to come out, the sequel, but COVID-19, there is virtually no cases near the equator. What does that tell you? First of all, in case you haven't noticed, it is getting warmer, and we are almost out of flu season. And since there's virtually no cases in the equator, it doesn't survive long in warm climates. So we probably have another month or so of the spreading of this until the flu season ends. So that's one thing. And then after that, we may not go straight to business as usual. But let's just talk about how the coronavirus, and what's interesting is that this is there's no precedence for a social media panic. Never had it. This is a social media panic. And I always have this thing, and I guess I'm a stickler because I tell people what I feel and I tell them exactly, and I'm very direct. I think people are very, very brave behind a keyboard. I've always said this. I'm not one that, if I go to a restaurant, I'm unhappy with the meal, I'm not going to run home and say, I'm really upset. I'm going to go on Yelp and say, yeah, this. No, I'll tell the manager, you know what? I think the service could have been better, or my food was not cooked as well. But people in nature, because we have this passive group nowadays, and I'm just being nice, all right? I'm being kinder and gentler, Lee Seiler, which normally I'm not. Look, we have to understand that people like to cause havoc and panic. The media is number one guilty, and they should be ashamed of themselves. You should report the news, but come on, not add your slant to it, all right? If I see George Stephanopoulos one more time, he's going to... okay. And I do like George, actually. So that being said, social media is causing a major impact on this. And now something that's turned, that is a social and health situation, has turned political. Whatever side of the aisle you're on, it shouldn't be a political thing, okay? That's stupid and ridiculous. Now let's talk about what's happening, because cruises, airlines, hotels, the food services, everything involved is slowing down, and we're going to have a pretty good quarter in GDP, and probably, if it wasn't for this last month, we were tracking near 3% GDP. Q2 is likely going to be, I see some predictions out there, 0% growth in quarter number 2. So that is a significant decline from quarter number 1, so it's called a sequential decline. Now we'll see if it gets into negative, and of course you have 2 negative quarters of GDP, that's recession. Let me give you what First Trust, whom I really trust their research, these guys are the best, they're the most read research by the investment professional. They're saying, you look at the unemployment rate, we're at 3.5% right now. Numbers just came out last month, hey, 3.5%. They say if you see a climb of 0.4%, you're going into a recession. So 3.5, if we get above 3.9, chances are we're in a recession. We're not there yet. But I assure you there are going to be layoffs. And, you know, layoffs are part of the business cycle. But there are going to be companies that I know. I talked to a buddy of mine who's in the convention business, and conventions are getting canceled. That hurts companies. I mean, when you're a medium-sized or small company and you lose a big contract, that is painful. And people have to pay for that. I mean, there are going to be jobs lost. We know that. So the impact on the U.S. economy, it's going to be drastic. Is it enough to put us in a recession? It could be, yes. And I think I thought we had potentially could have a recession in 21. This may really put us in there. The Fed cut rates a few weeks ago, 50 basis points. I don't think they should have done that. My opinion is I would have given the market a 25 basis point cut and then wait for the meeting next week and do another 25. So now they're talk that they may cut another emergency cut of 50 basis points. How is that going to affect the markets? This has already happened. I think we are probably at the peak of the cases in Corona. Excuse me, somebody's talking about me, got an itch. The peak, which means we're probably at the trough of the economic cycle or the market cycle. So that being said, what do you do? How do you handle this? Well, you long-term investors, you got to stay the course. This will pass. Remember the fourth quarter of 2018, all the China trade talk tanked the market within 3 months, 20%. This has been a fast, sharp decline. And luckily, our clients, we had some powder out there. We had our powder dry. We did some buying, and I think that's the time to buy. You want to buy. Warren Buffett has always said, you want to buy when there's blood in the streets. Okay? There's blood in the streets, folks. This is opportunity you're probably not going to get for another few years, because let's go to, and I showed you guys this. All right, let me find something for you. You know, corrections happen. And okay, let's real quickly. I just want to show you something here. Let me switch sides. Okay. Okay, we have about a 20% correction from peak to trough. So let's just call it 15%. A 15% correction in the S&P 500 happens every year and a half. Our last 20% correction was the fourth quarter of 2018. It takes about 110 days to recover from that. It didn't take that long in 2018 going into 2019 because it was also a fairly sharp decline. Things move faster these days, folks. Social media, trading is faster unless you use Robinhood. Not too fast. They've shut down, or they've stalled out 3 out of the last 8 trading days. People could not do trades yesterday on Robinhood, part of the day. So if it goes down 20%, that happens every 2.5 years. This is what happens in the market. If you can't stand the heat, get out of the kitchen. Most of our clients are not 100% equity anyway. And what you have to take a look at is using buffered investments, things that protect you on the downside, that can protect your entire portfolio. I love those. And there's several choices out there. And if you have questions on them, I will show you. Let's look at last week I showed you the history of epidemics. Okay? And this is pretty interesting because everybody thinks the world's coming to an end. The sun's in your eyes, got a pebble in your shoe. Remember when AIDS came out? Oh, we're all going to die. SARS, H1N1, let's go on and on. Ebola, Zika, the measles. What happens? Okay, this is just the market was a little bit overvalued at 19 times forward earnings, and oftentimes it needs an excuse to correct. And guess what? Lo and behold, we got an excuse, and it's the coronavirus. This soon will pass. If you just stick to your guns, stay the course, you will be fine. If you want some advice, you need some help in your portfolio, some reallocation, if you say, you know what, I don't want to go through one of these again, you get a hold of me. And I have to tell you, for those clients that watch my video, my clients are awesome. And yes, the phone traffic is a little busier these days, but very few, and they understand because we try to educate our clients using these mediums such as videos and emails, and actually more importantly is phone calls. So that being said, next Wednesday we're going to start. I don't know if I'm going to do it every week. I don't want to commit, but we're going to do a hump day, market day show. I just came up with that. I have no idea. Wednesday at 7 o'clock, Facebook Live. We'll take questions. I'm just going to talk about some things, but we will take questions. We'll do a buy-seller hold. We could talk about charts. We could talk about what we see in different ideas and stocks. You'll be able to call in. So we'll do that next Wednesday right here, Facebook Live. We'll have some promos out there so you can see it. It's going to be raw. It's going to be straight to the point, direct, just like I am. So hope you can join us there. Share this video because it's important, folks. You really just got to stay the course. Things are going to be okay. This is not the big one. All right, if we survived the financial crisis of 2008, which banks were about to go under, if you haven't refinanced your mortgage, go do that. I mean, historic rates. I talked to a buddy of mine, mortgage broker yesterday, 2.5, mid twos to high twos for a 15-year mortgage, low threes for a 30-year. If you need a referral, I've got a couple guys that I use, and they're fantastic. I have an event coming up March 24th, invitation only. If you're interested, you got to reach out to us and we'll see about getting in. Again, my name is Lee Seiler, Seiler Wealth Management, also known as the Stock Doctor. Website is StockDR at StockDR.com. Just breathe, relax. We are here for you. Do not panic. Everybody have a fantastic day.